Hi everyone, my name's Emma Jones and I am the Trainee Financial Planner here at Thomas & Thomas, and today I'll just be talking you through the main tax changes this year and the main tax allowances. As we know, tax can be a complicated topic, and these are the types of questions our client asks us in relation to tax. So they may ask, what rate of tax do I need to pay? What type of tax do I need to pay on what? What are the main tax changes this year? What is the most tax efficient option for me? What tax exemptions may apply? What tax allowances am I entitled to? And I'll attempt to answer these questions throughout the presentation. These are the main tax allowances this year. We have the personal allowance, which is set against income tax, the personal savings allowance, which is a new allowance set against the interest earned on savings, the dividend allowance, which is the amount you can earn before paying tax on shares, inheritance tax nil rate bands. There are two, the standard and the residential nil rate band, the individual savings account allowance or the ISA allowance, and the capital gains tax allowance or the CGT allowance, which is used to offset the capital gains tax on certain assets. Before discussing the allowances in any more detail, I just wanted to talk you through the income tax rates. There are three bands and earners will fit into either one of these bands. If you earn below 34,500 this year, you will be a basic rate taxpayer, paying tax of 20%. If you earn between 34,500 this year and 150,000, you will be a higher rate taxpayer, paying tax of 40%. And anything above 150,000 is taxed at 45%, which is the additional rate. As mentioned, the personal allowance can be set against income tax. The personal allowance this year is 11,850. This is increased from 11,500 last year. The personal allowance can be transferred to a spouse limited to 10%. So for example, a wife with no earnings could transfer 10% of her personal allowance to a husband who is the only earner in the household. The personal allowance also reduces when income exceeds 100,000. And I've just added in an example here of how this would work in practice. So the income exceeds the threshold by £10,000. This creates a reduction of 5,000, which is taken away from the personal allowance of 11,850, leaving a total reduced personal allowance of 6,850. And this would be the amount that this particular person could earn this year before paying tax. Then we have the personal savings allowance, which is set against interest earned on savings, perhaps in a bank account, or as many of our clients are aware of, a collective investment account. A basic rate taxpayer is entitled to a £1,000 allowance this year. This is reduced to £500 for higher rate taxpayers, and additional rate taxpayers are not entitled to a personal savings allowance. Please also remember that tax is not paid at source and must be declared on your tax return each year. There is also a dividend allowance, and dividends are the income paid on shares which may be received by a shareholder of a limited company or again within a collective investment account. Shareholders are entitled to a £2,000 dividend allowance this year, which I'll discuss with you in more detail during the next slide. Anything over this amount is taxed at either the basic rate of 7.5%, the higher rate, which jumps up to 32.5%, or the additional rate, which is 38.1%. The dividend allowance may well catch people out this year, and is why we remind our clients to watch out for the trap. The dividend allowance has dropped from 5,000 last year to 2,000 this year. Again, this tax is not paid at source and must be declared on your tax return. Inheritance tax nil rate bands are a type of allowance that can be set against inheritance tax. Inheritance tax is currently 40%, unless in certain circumstances, such as leaving assets to charity. Each UK domiciled spouse is entitled to their own standard nil rate band, which is set at 325,000, and a residential nil rate band, which is currently set at 125,000 this year. The residential nil rate band was introduced last year where it was set at 100,000. This has gone on up to 125,000 this year and will raise again next year to 150,000 and again the following year to 175,000. Please be aware this is only applicable to your main residential property being inherited by direct descendants such as children or adopted children. This next slide just shows you how valuable these nil rate bands can be. By April 2020, a UK domiciled husband and wife will be entitled to a total nil rate band of £1 million. Then we have the individual savings account allowance, or as it's most commonly known as, the ISA allowance. The allowance this year is currently set at 20,000. This was the same last year, where it was set at its highest ever level by George Osborne. As we know, ISAs are very tax efficient. Any withdrawals are tax-free. They're also inheritable between husband and wife. So if a husband were to pass away, his wife would be able to inherit his ISA holdings. And please be aware that the ISA allowance cannot be carried forward. During the last few slides, I'll just be talking you through the capital gains tax, or CGT. Capital gains tax is paid on certain assets such as works of art, classic cars, second homes, and stocks and shares. Basic rate taxpayers pay capital gains of 10%, while higher and additional rate taxpayers pay 20% capital gains tax. However, tax treatment on second homes are slightly different. Basic rate taxpayers will have to pay 18% capital gains tax on second homes, while higher and additional rate taxpayers will pay 28% capital gains tax on second homes. This type of investment is generally not favoured by the government and is designed to discourage investors from buying second properties as a method of investing. There is also a capital gains tax allowance, or a CGT allowance. The individual allowance this year is set at 11,700. This is the amount an investor could earn on certain assets before paying tax. This has increased from 11,300 last year. And if you are a trustee or hold investments in a trust, you may be glad to know there is also a trustee allowance. This is set at 5,850 this year, which is significantly less than the individual allowance, but this too has gone on up from 5,650 last year. Please remember the tax rules are subject to change, and if you are in any doubt, please speak to a competent accountant.